For today's podcast, we're going to be looking at central banking and wealth. Now, most people are going to be claiming that this is partisan driven, but frankly, it isn't, because this is, as you're going to see, is something that's going to impact the levels of many different political persuasions. It's not just one or the other. From the points of this, you're going to see that it's going to show that with this overlook, you're going to see that central banking has a great impact on the actual ability to gain wealth. And it's going to show that wealth just doesn't mean wealth at the top. It means wealth throughout the actual country. And we want actual natural growth of wealth in each country. No matter if you're from the United States or if you're from some other country, you want growth to happen naturally for the people. You don't want growth to basically happen because some central bank was essentially having access to control the rates of inflation, which essentially allowed commercial banks to essentially steal from the actual earners within the country, because they were in a position to where government allowed them to. And this is essentially where you have a group of people, they come in a circle from central banking to commercial banking and the government finance department. And this is really what's controlling the ability of wealth. And when it comes down to it, you'll have people try to describe that there is a magic number of inflation for people. Frankly, this is not true. Inflation is just basically saying that your currency is worth more than it actually is. When you do this, this allows the actual commercial banks to essentially profit from this, commercial banks and other people in the finance industry. That means they're profiting from this money that's in essence being stolen from the people. The way these people are essentially losing their wealth is through taxation, regulation, and through inflation. So when you have these three different types of things, it basically always impacts the ability for your average people who don't have access to these three benefits of being able to take money from taxation, which comes right back out to these people who didn't earn the money. The regulations, which essentially is, if you're a business at the top that can write the regulations, you can essentially benefit by being the company that knows it can sustain the regulations and having the big economic boost, as the other companies that can't sustain it are wiped out, and you essentially become a lot more powerful economically within the regions that you control and are able to expand after this point. And then you have the ability with inflation from these corporate banks and these commercial banks that are able to use that inflation to essentially pocket that money. Now traditionally the way banks make money is only supposed to be through the ability of loaning out money and being able to loan it out at a higher rate from risk than they're actually getting in from savings. And these are all based on the rates of what money costs. And money is supposed to be actually dictated by the market, not people at the top. And it's not supposed to be based on those people. And when certain banks get discounts, which happens, they're making even more money. And this is what happens from these corporate banks or commercial banks, being if their investment as well. They are able to do this And this is what causes your loss of wealth. And they're able to do this next to what you have for these smaller banks are not able to compete, meaning that they can buy up the customers of these banks and they can become much larger. Now, if we look at the whole situation, we need to ask what happens when inflation continues year after year. Well, this leads to an actual loss of purchasing power. They try to claim that either 2% or 3% is ideal. Now they never come up to an actual agreement. Even assuming at these amounts, this adds up year by year. And even to date, we're talking that since the central bank was established in the United States, people have lost close to 97% of their actual purchasing power of the actual currency. Now, this shows that the actual dollar is not worth much compared to what it was originally when the central banking system, being the Federal Reserve Bank, was actually established. And people ask, well, is the Federal Reserve a private or is it a public entity? Well, this is where things get a little bit hairy because it's actually neither. Because the president can appoint people to be on the board of the major bank in New York. It basically creates appoint the chairman. It creates a problem, being that it is technically public in that manner, but all of its other functions is essentially private. So it kind of reacts in a way that's both public and private. So it kind of hovers in this way that it's both public and private, and it's in this median era of where it's neither public nor private, meaning it's not susceptible to government oversight for the most part, and it's not susceptible to actually private oversight such as the SEC in its actual actions. So it basically kind of lives essentially outside the ability of the laws. This means that if any type of oversight is wanted, it needs to actually be voted on. Now the problem being is we find that they actually lobby for their actual bank not to be actually looked into for the actual decisions of why they're doing them. Now, while they can have most of their domestic paperwork can be handed over for a basic audit, most of their stuff that's actually going overseas for investments and such things like that are not part of this. So it's only a fraction of what people are seeing. And then the actual reasons for their decision making never go into this. You never get to see any of that going on. So this means it is not anywhere close to a complete audit. So when they go, yes, the Federal Reserve is audited, it's really a misnomer. It's actually technically it is not really a full audit. It is actually a horribly incomplete audit that is being done. And if they actually did a full audit, people would actually see why this stuff is being done, where some of this money is coming from, because they have some holdings in which there's areas that should not be held, and is actually held from private people's money, such as retirement funds and other such things that are forced because they're public employees that must buy these treasury bonds, and because of this, they end up forcing to these buying these treasury bonds that are basically useless because they're essentially acting in such a way that it's basically irresponsible to the actual government, because they were meant to essentially protect us from any type of economic problems. Now, if you look at the actual history previous to the Federal Reserve, you would see that economically that we were much safer. There was basically economically we would only go up and down depending on the actual quality of the business cycle. This means it would basically be an up and down cycle as normal. That we would have these short recession cycles, and it would not impact that greatly. Now, ever since we have adopted the Federal Reserve System, which has been a little bit over 100 years, we've actually seen that this system has actually made it a lot worse, and we've actually had not only recessions but actually depressions within the actual time that actually do not make any sense, and have actually gotten to the point of creating large bubbles that have actually popped and actually been reinflated and popped later again, making the situation much worse. Now, if you want to eliminate this, you're going to have to eliminate this whole system, and this is not exactly going to be very, very friendly with the whole idea of what they want. Now, the system's actually only gotten worse since we've gotten out of the Bretton Woods Agreement, which is essentially our gold standard. This essentially bound them and bound the government to only having the debt that the gold could back. Now, since we've gotten to a fiat currency, which is a currency that's backed by essentially nothing, this has then created essentially unlimited borrowing power. Only as much as we've basically created limits of how much we can take in for money, and even that we can vote to say, oh, we'll take on more debt, we'll take on more loans, as long as it's voted upon. Which is why we get to that point. So since we've created this whole system, essentially we've created a system to where basically the Federal Reserve will say, hey, we'll take on your debt bonds. The congressional bodies say we want more debt to pay for both social and social programs, and we want more military spending overseas so we can create more wars, and we want more foreign aid for these countries because they lobbied to us because they want more money. Well, when they keep doing this, this basically starts adding more and more inflation. They can the CPI, which is the Consumer Price Index, can keep calculating as whatever way they want, but there's actually more realistic ways of calculating inflation. They're obviously going to calculate in a political manner because it's not beneficial for them to actually calculate the actual realistic inflation. When they keep buying more and more orders to print more money and buy up more and more debt, it's going to basically cause more and more inflation. Now, this inflation is not going to be very, very low. That's just obvious, because if you're printing more money, you're essentially diluting the actual value of the currency. It doesn't take much of a genius to figure this one out. So as you're printing more money, this means that you're actually diluting the value of the currency. That's exactly what inflation is. So if you want, and we can blame China all we want, but when they deflate their currency, this is just them actually wanting to have a currency that's actually stable. We can easily do the same, but the fact is you cannot have a debt at that point. If we deflate our currency, it would cause, as a fiat currency, it causes a massive spike in the actual rates that we pay in debt. If you deflate your currency, your rate of your debt is going to go up massively, because you're going to have to buy up all that debt, and the actual percentage you pay on that is going to be much higher. So if we want to avoid that, basically we just keep inflating, and we basically still have the money to pay it. And as you've seen with it, more and more debt is coming into the actual budget. In fact, a good portion of the budget right now is actually debt. Is actually debt payments. We're not actually functioning to actually pay anything with it. A lot of the portion is now debt, because we've actually surpassed 100% of our GDP, meaning that if everybody gave 100% of their money, we wouldn't even have enough to pay off our debt. And the problem being is that we have this massive debt on our hands that basically is being financed by the Federal Reserve. We have the fact of this system that's basically over 100 years old, that's essentially robbed us, because it's basically told us, yeah, you can buy all the things you want. Well, the fact is, when you do this, you're going to create a system that's basically robbing all of the people in your country, because you're buying these things that you can't afford. And that's all it is it's just a giant credit card. And eventually these things are going to come to where people are going to have to essentially pay the bill. And we're coming ever so closer with this. This is the idea of this group, the idea of the people that actually invest into the Federal Reserve. Is the fact is they want essentially to get to the point to where they can own the government, which means they're going to essentially, their idea is to actually own the actual policies of the government. And that this is why other countries will invest, because they know that they can either A, take property, or B, actually take over the government through financial means. When it comes down to the actual wealth, people are going to keep clamoring for, we want higher minimum wage. Well, that's not going to solve the problem, because higher minimum wage means more inflation. You're just inflating the price of the bottom. And that means with it, you're just taking money out of the hands of the business owner, which means less people work, and you're not generating actually any money. That just means less people are working, so you're basically saying these people can't work, and we're just going to basically be hiring digital components to handle all of these jobs that were formerly handled by people. If you look at countries like Japan, they've already done this. They've already handled with these kiosk systems that actually handle all of these events. Now, we've actually avoided this, for the fact is we don't want to actually fire people in this country. We want to actually have these people in these entry-level jobs. But the more people start asking for this money as a minimum, when they barely have any skills whatsoever, and are often really don't even have even basic education skills, we're talking that we're going to get to the point to where we can't even have them at these points. And if we keep doing this, we're basically going to have to tell them, no, you're fired, get out the door. We're going with these things like kiosks or cleaning robots or whatever, because the fact is you're useless, and you are basically just going to cause us more money, because the business is not going to put itself at risk of going out of business just because someone wants more money. Because people don't stay at the bottom. People, when you start working in a company, you work your way up. And the problem is not the minimum wage. The problem is actually what's caused the actual dollar to actually have no actual wealth holding ability. You need to look at what's causing this. This is because of the vast inflation over the years. And if you look at it, it's because of the actions of the central banking. If you want to get rid of this, you need to get rid of the actual protection of the actual suppression of the actual precious metals, which is actually this is a group within the executive branch to basically keep precious metals down low. There's actually a group within that. There's actually a group to actually keep the stock markets from crashing out. It's within the same group, and these groups that are actually intervening to actually keep these things from getting to where they can't rise to natural levels, and actually get rid of the idea of a central bank and replace it with something that's actually real money, and that's precious metals. Because we can't really rely on the idea of a digital currency, such as your cryptocurrencies. Cryptocurrencies are nice for an alternative, but really they're more of an investment than anything else. They're not an actual real currency, because your even your anti-inflation cryptocurrencies like Bitcoin are nice and all, but the fact is they can be hacked into, and it can raise the amount that's actually in there. There's no actual physical piece you can hold on to that's actually a guard against this. This is why you don't want to go with digital currencies. You want to actually go with a physical currency. When you actually have a physical currency, you actually have something that actually solves the issue. This is why something such as a precious metal, which actually holds value beyond itself being a currency, is actually a great idea, such as silver or gold. Silver and gold have been used for thousands of years, and they've always retained value because they have value well beyond the actual usage of currency. As in antiquity times, they've been used as actual jewelry, and even up to modern day times, they're even used in electrical devices because of their actual massive abilities to have multiple properties that are very, very useful for their different applications. And this is why they'll retain a very, very high value, because it goes down to supply and demand. There's not a very, very high supply, but there's a very, very high demand. So when you actually apply this to actually coining these pieces, you can actually create the ability for this to actually be a currency and go to something that's realistic, next to actually something such as basically paper, which can easily be counterfeited, which is also another issue. When you have paper, you can counterfeit paper very easily. Doesn't matter what mix they create, people can actually create something very, very similar without a problem. When you have coins, you have to have those actual metals for that mix, and it makes it very, very difficult because you have to smelt that mix and actually have the dye to make the coin. That's very, very expensive, and people don't really have the ability to do that. That makes counterfeiting very, very difficult. You're never going to find somebody counterfeiting a coin, even if it's very, 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 very lucrative for that coin, because for actually making the dye, it makes it very, very expensive. Someone would actually have to steal a dye from the actual original source to be able to do that. And if you had security with that, you're not going to be able to have that happen. That's why if we're talking about actually keeping wealth, you're always going to maintain a wealth if we actually look at getting rid of the central banking. Doesn't matter what country we're talking about, getting rid of their central banking, adopting some type of precious metal standard, and actually going over and eliminating the debt. The debt is the main thing that needs to be paid off. This is the biggest thing from security concerns, for the government, because basically it puts us at the biggest security threat. If you're curious about national security, this is the biggest threat. It's not terrorism or any of these other things. It is our national debt, because it basically puts us at the beck and call of any other nation that owns our debt. And it also means that we need to basically pay off the debt, get rid of our central banking, go over to the precious metal standard, either gold or silver. It really doesn't matter. And then we need to actually basically adopt this for actually the whole country. And understand that basically inflation is bad. Inflation is basically stealing money from people. Now, if we believe that stealing is bad, then we should believe that that inflation is bad. And what this will cause a massive deflation in our currency that will actually cause it to go back to its original state. Yes, our currency will be worth a lot with it, but then that means that we can print very, very light coins, or some other type of form that will allow people to, if they want to carry coins or such things, or rounds or whatever they want to carry, it allowed them to actually purchase things at different values. We could also set up different settings for which people can actually purchase using other different materials, such as we have in our other coin system. And we could continue this without a problem. Now, while you're going to have negativity with the corporate banking system, because they're going to be taking a massive hit, because essentially they're going to have to repay what they stole in all of the wealth, because all that's going to be taken away. It's going to essentially be a system that is going to restore what was rightfully taken away, as the money that's basically was stolen is going to be replenished to at least the modern day system. Now, the past money that was stolen is not exactly going to be fixed, because this has happened over 100 years, and it's impossible to do that. But what you could do is you could do that change immediately, and it would cause a definite flip in wealth, and it would cause the flip where your money would be worth a great deal more. You could actually then, these people who are actually living week to week would actually be able to purchase groceries without a problem. And you would realize that minimum wage is not the problem, that you could live easily on this amount, and that we could have people living week to week, and all you have to do is basically just get a job, get out there, bust your butt, and then you can actually live off this amount. You can actually take the time and actually start developing a business and actually get out there. And if you expand out there and start getting rid of these regulations, you'll realize that it will actually bring a much better country. This is what they've actually found in areas in certain countries of East Asia that are actually much lower in regulation, such as Hong Kong as a great example, where you don't need to take a month of Sundays to create a decent-sized business. You can get a business license within 4 hours, where for an actual decent-sized business. Whereas to do from an aspect of a foreigner, if you're a foreigner going to the United States, it can take you as much as a couple of years to do the same exact thing. Now, 4 hours next to 2 years is a huge difference in time. And this shows you exactly how there's an actual disconnect with the world just because of what we've done here, and because we've put in these so-called social changes. Now, if we want to actually look at what we can do, we can actually create some of these benefits by looking at some of these other countries around the world that have actually done things positive for people, that have actually been pro-liberty, and not go toward the ideas of what Venezuela has done and ruin a whole country that used to be one of the wealthiest. Now, if we look at it, we can actually take this idea and actually become wealthy, because we have the opportunity in here to become wealthy. It's just what we're seeing is we're seeing people that are basically trying to hinder the actual development of wealth, because they believe that they believe only part way of a actual capitalist system. They believe it's a capitalist system, but we need actual hindrance on the actual finance. No, there should actually be where the market controls the value of the money. By not doing that, you're basically saying people are too stupid to actually make their own decisions of what they want to purchase. When you do that, you're actually creating huge problems in the future. Once you declare that people are actually smart enough to make their own economic decisions, you will actually get to a system that works for everyone. This is why we actually have countries out there that are starting to succeed, because they've rejected the idea of central banking. They've actually gone to an actual gold standard. It's actually the reason most likely that Gaddafi was killed, because he wanted to create a gold standard for his country, because of the fact is he believed that it was much better than going with the idea of these fiat currency central banks that were actually already there. He felt that his own gold standard could actually start funding areas of Africa, and because of the fact is that a lot of these central banks didn't like it, they were actually promoting the idea of war, and that's what gave us the Libyan war. Because of this, because there was a lot of financial interest in essentially keeping the idea of fiat currency alive, because if a fiat currency dies, it's going to cause a massive spread throughout the whole globe. Well, it's already started to happen, because you're seeing countries in the Middle East adopt a gold standard. You're seeing countries in Asia adopt a gold standard, such as China. So eventually it's going to happen. If it's not a gold standard, it's going to be a silver standard. It's going to happen where all countries adopt this, and the fiat currency is going to die. Keynesian economics and neo-Keynesian economics is going to die, because it doesn't deserve to live, because a failed idea doesn't deserve to continue. We don't live in an era where we keep up ideas that are actually wrong. We should let the best ideas survive. And if we have ideas that are much better, they should be brought to the forefront, such as ideas of actually promoting peace and not warfare. These are positive ideas. Any ideas that are actually positive should be brought to the forefront. These negative ideas should be actually debated and actually sought to basically be ended, because they're completely wrong and based on completely bad thoughts to begin with, and have actually been proven to be false. Whenever something's proven to be false with actually legitimate evidence, it should be dismissed from the actual community. In economics, with it, we have Austrian economics, and they want to dismiss that, yet that's the only actual true system that actually shows that they have a solution for the actual economic problems. Every other one actually has huge holes in it. And this is why we need to actually look toward Austrian economics for the actual solution to things, not actually saying, oh, it doesn't make sense to me, and so we're going to dismiss it because I like this one better because this one is this one. Oh, I think I can use this because this one gives me power, and gives power to the government, and we've used this for 100 years. Well, we've used it for 100 years in the U.S. and even longer in the United Kingdom, and it's actually failed multiple times. Shouldn't you actually look elsewhere of something that's not going to fail? This is what we should actually be looking at. We need a system that actually doesn't fail, that actually knows how to look. And their excuse is, oh, but it doesn't actually have a unified idea on how the actual consumer thinks. Well, the fact is that's the whole point. You can't decide how every consumer thinks. Every consumer is an individual. And this is the whole point. And because of that, that's going to create an actual value for the actual money. This value for the money is what actually creates the value for the currency. And once this is created, this is also going to create the actual value for the loans. As the actual economy grows, so does the value for the loans. As the economy shrinks, so does the value for the loans. And this creates an actual equilibrium for the actual economy, so the economy doesn't go into inflation at any certain point. From the actual overgrowth of the economy or undergrowth of the economy. It's actually a brilliant design system. The other one actually says we need to intervene on the economy, and this is where wealth is destroyed. Because when you intervene, you're destroying something else to help someone else out. As we discussed in our intervention talk, this is what happens. No matter what you do for intervention, you're destroying someone else to help someone else out. This is always the end cause. Now, would you rather have something that actually gives a natural occurrence for the economy, or would you rather destroy someone else to help someone else out, which is going to cause huge backlash in the economy? I'd rather have a natural growing economy that actually grows something that's going to help everyone else out. This is by getting rid of central banking. And this will cause actually real wealth growth for everyone, not just growth through stealing, where the actual corporate banks and commercial banks are actually getting their money from actually stealing from people and getting discounts at the central banking sites, because they have connections, and every other bank being essentially eliminated because of this. This is why, and that only leads to the fact is people are going to not understand anything of economics, and people are going to state, oh, we need more money for minimum wage. Well, that doesn't, and that leads to this whole big thing of not helping. If you look at all the times minimum wage has gone up, has it helped once? If you say no, then it means we need to go somewhere else. Now we're going to have a discussion on minimum wage and some of the history behind it. But if you look at the whole idea with this, is if something doesn't work, don't keep trying it. You need to go somewhere else. And that should be the whole idea of this. And if you like this discussion, like it, subscribe, and click the bell for notifications. And I will see you guys tomorrow.